Good morning, everyone. All right, so market's gapping up today. I think they fell quite a bit yesterday into some support. So not unusual. When we look at this, say, well, where are they gapping up to? And basically they're gapping up in the middle of nowhere. So, meaning they're in a relatively tight range here intraday. You can see, look, I started with the Qs here, the ETF. We'll take a look at the futures. But this was the big drop into the gap fill yesterday, an obvious point. Looking over there to the left, where there's support and somewhere between what we'd call the major support at the bottom of the range and the gap fill would be where buyers would show up. And they did. And then from there was, the choppy type of price action that we thought would happen yesterday pre-market. And so as it came down here at the end of the day, it held, right? Rather than kept going down. And now you can see they're at 209. And just looking where that is, it's basically in the middle of nowhere. You got resistance up here. Now you've got support since it's gapping above this little high right here. So when you look at it as what now? Well, trading in between here, which way will it go? Now it's got support below, it's got resistance here, and it's not that far away. And it could lead to some pretty choppy price action there. So maybe it's going to be a day of consolidation. If it can break below here, it should be bombs away to the downside. I guess to some extent, there may be an overstatement, but the 200 MA is sitting right there. So the 200 level, I think, would be a pretty obvious stall point. But if this gap up fails and comes through here, I think it's likely just to be a stall point, and then it'll continue to go lower. In any event, we start the day in the middle of between two forces. Now that we've got this resist support area, you've got this demand area and you've got this supply area up above, and that's relatively small. So we'll have to keep that in mind. The weekly is still in development. Today is only Wednesday morning. So we're going to be looking to see how this red bar develops throughout the week, meaning, does it close deeper? Is it down at 200? Is it a bottoming tail bar? So we always have to have an open mind, two scenarios, say, wow, well, the red bar would make sense. It's in a downtrend. It's at the right place to form a reversal. And if it closed down at 200, that's going to support a bias that regardless of whatever wiggles might happen over here on the daily, this is going to go down. On the other hand, if it closes with a bottoming tail and closed at the high, from my perspective would be amazing, but nonetheless, I would look at it and say, okay, that's good information. We're changing our bias here from a beginning of a turn here to one in which would say, could this even be possibly a measured move all the way back up to the old highs? So that seems unlikely, but we have to stay objective as traders. And one concept from Master Trader Technical Strategies is bar by bar analysis. And the goal of bar by bar analysis is to take that bar and continually update the information provided to you within the context of multiple time frame trends and support and resistance, and force you to be objective. So right now, the bias is more toward the neutral to even becoming more bearish side. But if this bar closed at the high with a bottoming tail bar, I'm going to have to rethink that. So we'll see where it goes. We're still in development mode as far as the weekly time frame goes. All right. S&Ps, we always look at the other markets to see is one outperforming, is another underperforming, is one in complete conflict of the other. So the S&Ps here up at, 278, 278, we look where that is, up at the top of a red bar after a gap down. And so right about the area of that high. So we've got unfilled gap over here. And from the bearish point of view, this gap shouldn't get filled. Right? Just let's leave it open. And the market's been a bit crazy in that. Look at this, gap up, gap down, bearish island reversal. There's the gap down, gap up, bullish island reversal, gap up, gap down, bearish. So market is schizophrenic. I like to use that term with the market over the last year and a half or so. And this is schizophrenic kind of price action. So now, same story here. You know, we can drag this down and say, well, here's that unfilled gap around 280-ish, which should be the upside limit there, give or take. And then we see if it actually rolls back over, even if it just gaps up and gets slammed back to the downside. That's going to be some valuable information as well. On the other hand, if it gaps up and it holds, you know, above this level all day, you know, well, the battle continues. Patterns like this, where they retrace into a declining 50 MA, into some resistance and gap down like that and can't lift off the mat, that's not positive. But now we've got this gap up, kind of throws a monkey wrench in the downside bias happening in the short term anyway. And we'll just have to see how it develops. Diamonds, you know, they gap down a larger amount. You can see they cleared this area here, but kind of the same choppy price action that was anticipated yesterday. Weekly sell setup. Again, the bar is not done yet. At 234. Now it's gapping up above this little area, but the next area is lurking right up above. All right, so right up there. So what we call the heavy lifting. So it's not the kind of gap that we look for to take advantage of. It doesn't present a great opportunity. A better one would have been gapping slightly below this low and jiggling around there with the void below. That's a nice setup, looking for it to go lower. Now this gap up has created this little support in the middle of nowhere. So we're just going to have to see how this unfolds. I didn't even get into that yet, Ganga, SPX levels. So we'll take a look. Paul has posted something in there. And maybe you can't see it since you just came in, but we'll take a look and get to the futures and see where they're at. All right. Russell. It's kind of a weird kind of a pattern, especially when you look at the futures. Yesterday I said this kind of on the futures looks like a bull flag, even though it's in a downtrend. I mean, bull flags ideally are happening in uptrends, you know, not this kind of a pattern that's kind of crawling its way after getting decimated. In any event, you know, we're here at 120, you know, so not a significant gap, just a lot of, just a mess. I don't know a better technical term for this, but it's a mess. You know, you got a sideways trading range on the hourly with gap up, you know, gap up that fails, gap down, it holds that little support, gaps up, you know, so yeah, it's just a mess. Transports, you know, they closed above their open yesterday. So a little bit of positive price action there, not to fall further. And now we can't even tell, this doesn't really trade much pre-market, so hard to say what's going on anymore, but we'll assume that it's up a little bit. We could start looking at transportation stocks and get a focus on that, but I'm not going to get into that at the moment. And let's look at the futures, S&Ps. You can see the retracement. So the futures, they don't give us the gap view. They give us, you know, for the most part, we get some gaps on the beginning of a week, but we don't get gaps intra-week most times. So we've got this larger red bar, and our factory work, as I like to call it, is, well, how deeply is it retracing into the big red bar there? And it's a little more than halfway. So not bad, doesn't negate it, and it's still going to open up there, and it's cleared this pivot right there. You know, it developed this support area, and now it's cleared this pivot. And the problem with a pattern like this is, well, how far is the next pivot? Well, for day traders, it's tradable. But as you look at a pattern like this, it says, well, the next reference point isn't far, and the next reference point isn't far, and the next reference point isn't far. So it's going to be really difficult to get a move that moves with momentum to move through these areas, meaning you could get short-term momentum and then it stalls and dies and you get deep retracements or it chops around. So I guess the takeaway for that, to help with some educational advice, is if you get a nice move that might happen in 15 minutes up to the next resistance area, take the money and wait to see what's happening, or take the most of the money and hold on to a little and give it some room to wiggle. And so patterns change. And for day traders, the pattern setup can change from one day to the next, obviously, and you have to be able to change with it. And so as it hits this area up here, as it comes into, it is possible that while this is moving up short term, it starts to go sideways and rolls back over to the downside. And at that point, the question becomes, does this newly created support area, does it hold? And we don't know. But if this was to start coming down immediately from here within the first half hour, my assumption would be it would hold momentarily and then eventually break lower. So we're not going to have another easy day here. And it may be the ideal day for SPX call or put spreads, where things may stay in a choppy trading range where we can get some premium, up here, up in these levels up here, because it's not likely to get all the way up there today. And if this can hold up here, right, this continues to move up, the deeper it moves up into this red bar, the greater the probability that this will hold for today, at least today. And that's all we're interested in, is today, when we talk about 0 days to expiration credit spreads. So from that point of view, if it gets up into here, guys, it may even be a double score where premiums up here and premiums down here, you can put on an Iron Condor today and play both sides. So we'll see how this evolves. NASDAQ futures, you see the nasty drop, created that void, it built up some support, and now it's coming up to where the heavy lifting is going to begin. Right? That's where it broke down from. And in this area right here is where the sellers are going to be. The deeper it gets into that, the more we have to respect that sellers are taking control. Right? So this was the strongest market. This was the strongest market, which should turn in the best performer. So it came down pretty hard. And we'll see, it is right on this. This is a red line, but right on this support. The 50 MA is there. You got the 200 slightly above converging, and you got all these overlapping candle bodies in this area. So it's a pretty significant support area. That's why we marked it off yesterday, to be aware of it. And now we'll see how far it can retrace. SPX, let's take a look at that. So let's get rid of this. This is, for those of you that are new, this is where we were talking about the probability of a measured move. It got a little bit above there, and there was our theoretical at the time. And yesterday talked about a bull trap, and bulls are trapped, and now they're in desperate hope mode that this will work out. Okay. All right. So obviously premiums above this level should be a no-brainer. Right? Anything up in here, I guess depends on how close you want to get to that. But, as long as it can stay below the gap fill up there, right, up above here for call spreads, the further away you can get with a premium, right? If there is, can you accept less for a greater probability of a short thing? That's a choice. Breaks below here, you got a problem. So you look to the next stopping point, which is down at this next pivot low. So ideally to be, let's call it safe, premiums down below 26.50 or thereabouts would be the safest sure bet of collecting that money at the end of the day. That's a choice. If this retraces, again, we don't get the data pre-market, but if this retraces into that gap fill or can get a little deeper into it, down below here could become high odds as a spread. All right. YM, the laggard, still lagging, but holding here for the moment up into resistance. And here is the futures. And this is what I was talking about, is you get these complete bars where it started to look like a bull kind of a flag. Not the best, because it's not like it just ripped up and created a void. Kind of like, yeah, it went up, you know, these bars are overlapping and it came down. But this pivot's holding, right? Even in a weak market, it held. So the Russell, while it's the weaker of the markets, in the way it came down, at the moment, it's showing some relative strength. That's just a mess here. You know what? Maybe you can get up to the top of the range. Who knows? You know, when patterns are like they are, sometimes it's better to go find something else to trade than messing around here. Oil, this is the next month. You know, what you all know what's happening with the current month, that craziness, negative $40, and where it was at $20 and back up again, and the storage thing. So there's the current month, and it's still, you know, I guess that issue. I mean, you go out to further month and it's not at this price, it's much higher, but it's amazing what's happened here in crude oil. Someone said in the room yesterday, Wisconsin was 99 cents a gallon. Crazy. Anyway, good for us, right? Good for us. But this is extended to the downside. You can see it's popping up here a little bit. Bonds down, makes sense. You know, they're at resistance. We covered this yesterday and kind of been moving inverse, not lockstep, but inverse with the equity markets. Gold may be the place to day trade today. Maybe this can keep going. Silver, which has been weak, just stabilizing. So there's the markets. I think it could be another difficult day as far as trending type of moves. So be nimble. All yours, Dan.
All right, thank you. Good morning. Yeah, I saw that on CNBC yesterday about the 99-cent oil, Wisconsin. Not oil, but gas price. All right, let's take a look at opens. Google put on a call spread yesterday. It's a bullish gap up over a number of these pivots, but our strike's still far enough away, so nothing to do now. Piton, buy setup, bottoming tail. We sold a put spread yesterday. Zoom still have a call spread for Friday, and IWM call spread for Friday. The swing letter, ADP, we shorted that, and it's also a bullish gap up here. So yeah, things are going to be tough here today, but our stop is the prior day's high. So it's right mid trading right now. Aflac, same, shorted that. CNK, we're long stock. It triggered 2 days ago. APA, another little gas oil stock, gapping up. We're long stock on that. IWM, we have a bear put debit spread. Marijuana ETF, MJ, getting a little gap up here. We're long that. We have a covered call. In Tilray, gapping up a little. And finally, WDC, we're short. We covered a third at $38 yesterday. I tightened the stop, so yeah, it's gapping over this pivot. We still have an open gain of over, looks like $1.30 right now. So yeah, we'll use 5-minute high for a stop on that. And today is MT Live, another great session, trading gaps. So everything Greg was talking about this morning, we'll learn about it in greater detail. Yeah, this USO, you know, with the front month being so cheap. Do you remember I gave you all the analogy on contango? You're having to pay 21 nickels to get $1 back. That's what the headwinds are when you have future months more expensive. So with the front month so cheap, June right now, relative to the further out months, think about it. Just use common sense that if you have to sell your front month, here, let me pull up the quotes here. So you're the fund manager for USO. And so you're having this, it's 27 days to expiration on the June, but I'm just going to show you the math. So let's say that guy has to sell at $14. Wow, do you remember 2 days ago this was negative 40? Wow. So you have to sell at $14, take those proceeds, and buy the same commodity, the same crude future for another month out. It's going to cost you $21.40. So that's $10 a barrel of drag. That's it. That's contango. That's it. Yeah, I know you all typed something here about oil and interactive broker. It's on my list here. Let's go through these earnings. We've got a bunch of them, but interactive broker gapping down. And interesting, they said that they took, I think, like an $80 million loss on oil. So and so I didn't read the details, but I'm pretty sure they're talking about, yeah, they're talking about they're blowing up some of their customers, and they're having to, as Greg said, you're the broker dealer. You have to make the clearing firm whole. If you're still in business, that's why they get you out of trades, because they don't want to have to take the loss.
But
all right, let's go.
every customer signed their life away. So unless they have their assets in a trust, another corporation or whatever, IB is coming after their house or whatever it is. They can be sure of it. So there's going to be a lot of sad stories out there.
Yeah. Let's see, Man H. I don't know if this was earnings or what, but nice big gap up. But, you know, the dailies are total messes here with overhead resistance. So I think I'm just going to have a day trade mentality right here. Charlie Papa had earnings. I can't tell where you're gapping. To Mo. This was actually a buy setup, not a clean one. This is a gappy little guy. This was a gap from a 1, 2, 3. That was a bullish gap. Again, we're talking about gaps today. That was a pro gap right there. It's in a downtrend, gapping out of this base, breakdown failure. That was nice. So it had a deep move, pullback, gapping up. This is worth watching. Tomo. EXAS, some of the folks in the green trading room who have been trading this the last couple of days. Up a little bit here, $1.50 or so. HCSG, I can't tell where you're gapping, had earnings. Rob, very simply, Greg was just saying that if you cause a loss to the brokerage firm, they have the right to come after you because that's the documents you signed. Derek, your drop down, please. WRB, I can't tell what you're doing. Yeah, Delta had earnings gapping up here. It's on my long list. This is a descending triangle. So tight volatility. And, you know, this pattern is tradable up or down if we get, you know, a something bar. So Delta's worth watching. Derek is saying UAL to short. You could short, yeah, the pre-market low. I actually like the pattern of LUV better, but LUV's gapping up. But under the lows, this looks good. All right, we'll watch the market, but let me continue with these gappers. RLI looks like it's gapping down. Let's short watch, 5-minute low, but I really don't like the way it trades. All those overlapping bars. Charlie Bravo Insurance had earnings. Oh, remember I told you all about yesterday, the story about insurance companies and, you know, if they're talking about legislation, whatever, going after them. There was a big article in our local newspaper today where a restaurant group right down the street from me, that they have business interruption insurance with Chubb. It was a well-written article. And, you know, it's what's called an all-inclusive policy, which means they cover all business interruption unless specifically excluded. And the article said many policies do exclude pandemics. This one did not. So they're class action suing Chubb because they're refusing to pay. And I hate litigation myself. I just think we're in a crazy sue happy world. But based on what I read in this article, I am 100% on the side of the restaurant owners. You paid for a policy and now they don't want to honor it. Saying, well, it was implied that it was excluded. Yeah, right. All right, continuing bullish gap. IMUX.